Good day, my name is Christel from Frans the Klerk Independent Technical Analysts. This week we want to kick off with Capitec. And yes, everybody knows it was a bloodbath the last couple of weeks. But again, we see that technical graphs don't lie. When a graph has got a double top, triple top, or head and shoulder formation, that graph should be noticed. The second thing that we also have been taught once again is that when a 40-week moving average on a weekly graph changes into a resistance, investors should take note. Kian wanted us to look at Capitec. And Capitec's first bell rang when that 40-week moving average changed into a resistance in the week of the 2nd of March 2020. And more importantly, Kian, look at that technical goodbye kiss that was given on the 40-week moving average. What happened? The share broke through the 40-week, bounced again, tested it, could not change it into a support, and retraced from it. That is seen as a negative technical goodbye kiss. Why? It went and tested that level. It could not find enough buyers to change it into a support, and the selling pressure just took the share a lot lower. Now, the double top on Capitec was confirmed there at 1,094 Rand and 90 cents. When that level changed into a resistance, it just basically played it out within 1 day. Now, the big question is, from a theoretical perspective, this is a weekly graph. So you should have waited for the share to close below that level and then make the decision the following Monday. That's what the textbooks say. However, we've seen now in this last couple of weeks that if you maybe wait for a candle to close, you might miss the boat completely. Now, the big question is, how far can Capitec go? Now, if I draw in here the next support line on Capitec, it is waiting there around 826.30. Again, it has been changed into a resistance. What that means is, if the investors does not start to buy at around 826 or even lower and start to protect that level, we can see the next support even lower. The next support lower on Capitec is waiting at around 605 Rand 45. Why? Because I wanted to look at a trend line that has got at least 3 touching points. So the reason why I'm looking at line graphs this week is I want to try to eliminate and remove the noise. There's already so much noise at the moment, we can do with a little bit less. So at the moment, my next support has to be change and keep a support, or that resistance has to remain a support on a weekly graph. In other words, by Friday, that level there around 820 should remain a support, change into a support and remain one. Otherwise, the next big test will be at around 605 Rand 45. Now, we've seen again in this market, companies with high PEs got slaughtered. In fact, everybody got slaughtered, but the ones with the high PEs got really beaten first. Which, Kevin, such a good question, takes me to Naspers. A share that has unbundled into process, big part of the top 40, but there's a megaphone formation that I cannot ignore. Now, a megaphone formation is a formation where it widens, the mouth of the formation widens. And that, unfortunately, changes into a jaws of death when that lower band of the formation changes into a resistance. And again, it has done that already. The textbooks say you should wait for it on a Friday close, but again, it's below 2,028 Rand and 7 cents. So technically, by Friday, if Naspers continues to close below 2,028 Rand and 7 cents, that formation is on the table. Yes, we can have false breaks where it bounces and changes it into a resistance and goes through and supports it again to higher levels. Yes, that is possible. But write the level down. Because if 2,028 Rand and 7 cents remains a resistance, Naspers might easily go back and test the next support, waiting at 1,705 Rand and 20 cents. And please take note, we've mentioned before, double tops, triple tops, head and shoulder formations should not be ignored. And I'm sitting here with a massive double top formation on Naspers, which means if I take this, brace yourself, and I measure the length of one of the conservative leg of Naspers, and I project it downwards, it means it can go back to 829 Rand 20. Now, A month ago, we always said, a market doesn't drop in one line, instruments doesn't drop in one line, it takes a while. If we look at the last couple of weeks, a lot of these shares have just been slaughtered. So we need some buyers. We need some investors to start protecting this market and this panic sell-off to stop. Yes, nobody knows what the future might hold and when it will end, but there is still markets out there that needs to be sustained and that needs to be fueled. Technically, keep an eye on that level. I'm going to give you that exact level on Naspers, and that is waiting at 1,720 Rand. Below 1,720 Rand, that double top formation on Naspers will be confirmed. And then, of course, everything is oversold at the moment, which means as soon as there's a hint of optimism or a hint of a cure or a hint of maybe even stimulus. We've seen it hasn't really worked in the US when they use the word stimulus and governments and Federal Reserve banks to get in. But some hand might easily support this market because there is low PEs, high dividend yields. But the formation is warning. 202807 is your level that needs to change into a support on Naspers, and that 1,710 level is a critical level that needs to hold the support on Naspers. Otherwise, that double top formation will be concerned. And I don't need to say what that will do to the top 40 index. Anheuser-Busch. Ellery wanted us to look at Anheuser-Busch. Ellery, again, a head and shoulder formation that warned. That said, hey, this is a negative formation. Take note. And when that neckline was confirmed on Anheuser-Busch at 1,119 Rand, it just plummeted to lower levels. In fact, often we've seen that the head and shoulders, the double tops, the triple tops, take the share a lot lower than actually even the target of the formation, when panic and fear is just on the order of the day. At the moment, on Anheuser-Busch, I even looked for you already on the daily graph. There's no turnaround candle yet. There's no some support. If you take an iron ball and you drop it into the ocean, only when it finds a bottom can you identify some sort of level of support. Whether it's a coral reef or actually the bottom of the ocean, nobody knows. But at the moment, there's no support yet. There's no bottom yet. And trust me, this won't last forever. When it starts to turn around, there are going to be so much opportunity on our market. And therefore, I really want to maybe suggest to our viewers to think about subscribing to our services, www.fransdeklerk.com. It might just be the best 300 Rand you ever spent. Murray wanted us to look at DRD. Obviously, the gold counters was slaughtered. Even Impala was slaughtered. Because a lot of the analysts says, people go to gold in rainy days. But when the rainy days come, they sell gold because to buy actual things. And if we look at the gold price later on, you'll see the strong end support and even the sell-off that occurred in gold. Murray, the strong support on DRD was at 7.59 Rand, which is great because at least this iron ball has found its support. The big question is, will it hold? So as long as 7.59 Rand is a support on DRD, I would be happy with this share. Yes, it's still above that 40-week moving average, and that is seen as positive, and that waits at 7.10 Rand. So you might see a bounce, a pullback. And take note then, Murray, make sure that these pullbacks keep on giving you higher lows. So because the higher lows tells you that somebody is buying the dip. Somebody is buying even if the share retraces. And that is normally an indication. But having said that, if DRD bounces and it finds resistance and it retraces, and it bounces again and finds resistance, retraces, then you get lower highs. Again, very negative. And then often you get an ascending triangle at the top, which is very negative. We're going to look at examples. So make sure that as long as the share keeps on making higher lows on the pullbacks, you're fairly safe at the moment. And of course, the 40-week moving average is your critical key. And some might say, Christelle, the 40-week moving average is too far. And I even looked at maybe changing it, to a shorter average. But trust me, the 40-week moving average is the solid critical level that should not be ignored.